Afternoon, everyone. Thank you for joining us for today's training on how to structure VA loans for loan officers. Right, let me get right into it today. How to structure VA loans for loan officers. All right, hold up a second here. Let me share my screen. Sorry about that. All right, beautiful. Okay. So let's get right into how to structure VA loans for loan officers. So, VA home loans are for active military veterans and spouses of deceased active military or veterans. This is very important to note because there seems to be some confusions on VA loans about adding uh, co-borrowers to the loan. Okay, so the only co-borrower that you can add to a VA loan to maintain 100% LTV is the spouse of the VA loan. Now, the VA loan could also be applied for by the uh, spouse of a deceased active military or veteran, right? But however, please note that if you do need to add a co-borrower who's not a relative, like for example, a son, daughter, mother, father, grandmother, grandfather, whoever you're adding to the loan, please note that has to be with the prior written authorization of the VA. You have to request the exception. There has to be a reason for it, and also it is going to result in a lower loan to value. Typically, the loan to value you're going to be looking at when you are using a an unmarried co-borrower is 85%. So you have to make sure then that the VA loan is the only option for you for your borrower then, because at that point it will no longer be a 100% loan to value, it'll be 85% loan to value. So keep in mind that is going to be the situation when you have an unmarried co-borrower, right? So to recap it, because I see a couple people just came on, um, VA loans are for active military, veterans, and spouses of deceased active military or veteran. That's how you get 100% LTV. However, when you bring in a co-borrower that's not married to the active military or veteran borrower, then your loan to value is reduced to 85%. Please do note that the borrower needs to have served the minimum amount of time, either in active duty or in the reserves, to qualify for the VA loan benefit. You're looking at 2 years of continuous active duty or 6 years of combined service in the reserves or National Guard. Uh, so do note those very critical time factors. Now, obviously, in order to proceed with the VA loan, you need to have a certificate of eligibility, also known as the COE. Do not confuse the certificate of eligibility with a discharge document, which is the DD 214. The DD 214 just confirms that the individual was in the military, that they are now discharged. It will state, how they were discharged and the service, what branch of the military they were in. However, in no way does a DD 214 confirm the veteran or active military's um, eligibility for a VA loan. In this case, a DD 214 would only be for a veteran, right? You're not going to have a DD 214 if you're currently in the active if you're currently active in the military. So do not confuse the borrower providing a DD 214 as a certificate of eligibility. The certificate of eligibility can be requested by the borrower from the VA directly, or you, the MLO, can also request it from the LGY portal, right? That's the portal that we access in order to process any of these VA loans, right? You need to have credentials to the LGY portal to be able to request the certificate of eligibility through the LGY portal. You need to have credentials to the LGY portal to be able to order the appraisal and communicate with the VA and the VA appraiser, right? You do not order the appraisal on a VA loan through Appraisal Works or through the AMCs. You order it through the LGY portal. And you also order the certificate of eligibility through the LGY portal. Those are the two main things that you're going to need access to the LGY credentials so you can access the LGY portal. Also, when you want to, do research on your loan and get all of the features of the LGY portal active, you have to log into the LGY portal. So make sure that you get those credentials because they're not immediately obtained, right? You have to go do a couple of different steps. You have to get your ID, a third-party verification account properly configured so that you have access to the email account that you're using to be able to complete the multi-factor authorization, right? So make sure again LGY portal credentials, and then also make sure that when you are in your LOS, in this case we use Encompass, right? It is essential, right? You're going to get your certificate of eligibility. The certificate of eligibility is going to have certain information like the loan code and the entitlement amount, branch of the military that they served in or are currently serving in, and some other data points that you will need from the certificate of eligibility that then you will need to enter that information in the VA forms that are in Encompass, right? Specifically, the two main forms we're looking at is the VA management form and the VA loan summary form. Both these forms need to be completed prior to your running automated underwriting through Encompass. Yes, for VA loans, we do run automated underwriting through Encompass, whether you're using LP or whether you're using DU. It is highly recommended that you complete the VA management and VA loan summary forms. Once you have the certificate of eligibility, complete both of those forms in Encompass so that when you do run automated underwriting, you do not receive errors that are going to be present if the form is not completed. It's not going to be able to, you'll get a DU approval if it's an approvable deal, but it's not going to be taken into consideration important factors like the entitlement amount for this borrower, amongst other things. And even if they are entitled to a VA loan, you won't really know that until you have the certificate of eligibility form. So, real important. You can't really be providing a pre approval to a VA borrower unless they've already provided or you've already obtained a certificate of eligibility to confirm that they are eligible for a VA loan. One other form that's needed and usually missed is the nearest living relative slash child care statement form. If you don't complete this form, you will receive an error or a warning, an alert in your findings. Your DU findings aren't going to be correct. And when you go try to get the file disclosed, it's not going to be complete with the needed documents to be able to disclose a file unless the nearest living relative slash child care statement form is completed, and that is a form found in the forms section of Encompass or whichever loan originating software that you use. Now, when you are looking to structure the file, keep in mind the overlays that are present regarding credit scores, right? VA lists general requirements in the guidelines, but the different investors may add what's called overlays to the guidelines, right? They're going to put minimum credit scores, overlays. So when you are structuring your deals, make sure that you pay attention to the overlays that the different investors are inputting, because once you have the credit report, now you know exactly where you stand so that you can properly structure your deal. Uh, and so you have the right investor where you're going to be able to submit that file to, right? Now, this is very important because credit score is one of the components, obviously, to consider, but so is DTI, right? When you're structuring your VA deal, do not make any type of a decision until automated underwriting has been run and until you have your findings. Because we all know that maximum DTI is determined by AUS, but also something that's very important on VA loans is residual income. That's why you need to complete the VA management form. You need to complete the VA loan summary form. You need to have all those factors taken into consideration so that the LOS and DU or LP, whichever you use, can determine the residual income of this borrower. And then, depending on the number of members of the family, that's why it's important to fill out these forms, because you're going to put in how many members are in the family, where they live, all that kind of good stuff. The system will determine the minimum residual income required for that borrower. So, assuming it's a family of two, in a certain part of the country, the system may determine that the residual income is $1,500, right? So if that borrower meets the residual income requirement, there's a very good possibility that even with a 60, 61, 62% DTI, your borrower will still receive the approved eligible. And that is because they met the residual income requirement. Conversely, you could have a situation where the DTI is good. The DTI is, within the scope of what you need, or at least you think it is, but the residual income requirement is not met. It is below the minimum for that family size for that area, and DU will not approve the file, right? So residual income is basically the money that you have left over after meeting your obligations to live. So after meeting your housing obligation and your credit card minimum monthly payments, how much money do you have left over to actually live, right? To pay electricity, to pay your utilities, to buy food, just the incidental expenses of life that would have to be paid by whatever income you have left over after meeting your debt obligations. That's residual income. If the system doesn't, picks up that you haven't met the residual income, then you're not going to get the approval. And conversely, I've had them at 63% DTI, and I have received the approved eligible. And then in other cases, I've had DTIs much lower than that I thought would work. And when I ran automated underwriting, didn't get the approved eligible because the residual income amount was too low. So don't be. That's another real important reason why we would never, ever, 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 ever provide a pre-approval letter based on anything other than taking a complete application and running the application through automated underwriting. Because you could get a scenario where you think, oh yeah, DTI, you do your pre-qual, DTI looks good, you're within what normally would be approved by VA. MLO says, "Oh, this is good enough for me." Gives the borrower a pre-approval letter. Hey, you're pre-approved up to X dollar amount. Then contract is received. Formal loan application submitted, runs through AUS, and then you don't get the approval because you don't meet the residual income requirements. That has happened. That can happen. We don't want that to happen here at the Mortgage Calculator. So for our pre-approvals that we provide, it's a complete application, review documentation. If it's an agency loan, which is FHA, VA, USDA, and conventional, those are run through automated underwriting. USDA is GUS, right? The GUS portal. But that's what we need to do on all of those. If it's non-QM, you are the DU, you're the filter. There is no automated underwriting on non-QM loans. So you have to gather all the documents, get the credit report, review documents, review credit, review the loan structure, find the guidelines that are best for the structure of that particular loan, and then confirm that the loan parameters do meet all the guideline restrictions that may be present from that investor, and then you give your pre-approval letter. That's how it works when it's non-QM. An agency, we run it through automated underwriting. So I want to see if there's any questions for the VA loans. This is an overview basically for loan officers on how to structure your VA loans. I mean, there's definitely much more information regarding specifics on VA loans than what we give in these trainings, but we want to make sure you have the essential steps, like getting your credentials and understanding that you need credentials for the LGY portal. You don't want to have that loan application, then all of a sudden you got to give it away because you don't have your VA credentials. It's going to take a couple of days to get them, and we cannot hold back that purchase file. So don't get caught in that situation, and make sure that you have your LGY portal credentials. So I'll give it another minute to see if we have any questions here on VA loans. VA loans are obviously an amazing loan program. They are, and we're getting a lot of activity now with, agency loans, right? Especially now that the holidays are going to be over pretty soon. In the new year, we're going to have a lot of purchases taking place in the agency world, VA, USDA, FHA, and conventional. And you want to be ready. You want to be locked and loaded to be able to capture those applications and submit your loans, especially your VA loans, to the LGY portal. All right, so I don't see any questions here. I do thank you for being on today's training. Just a reminder, we're only having these trainings now on Thursdays, so I will look forward to seeing you on next Thursday's training. Have a great day.